Right, let's talk now about sustainability. Sustainability is a word that most stockbrokers and financial advisors and fund managers couldn't even spell 15 years ago. Today, it's all important. What we're going to do now is have a look at this very comprehensive Nedbank sustainability outlook. And the key point here is it's very simply and very well put, it says sustainability rests on a simple premise: the interconnectedness of all things. CNBC Africa's Samantha Loring is going to give us an introduction to this.
Well, thanks so much, Lindsay. It's good to be on Power Lunch. And I've heard from your producer that you're a bit of a green cynic. I don't know if that's correct, but I'm certainly here to raise the flag for the greenies. So the question today is really about, is growth good? And then, of course, can the Earth sustain growth rates as they are right now? Because, I mean, the IMF recently coming out and raising sub-Saharan African growth to 6.1% for 2013. Everyone applauds this and says, look how fantastic that is. Look what the Eurozone is doing, contracting. The USA, of course, mute growth. So let's just take a look at the issues around the theory around the limited Earth problem. And of course, if you look back to the 1700s, you had a population of around 600 million. The population now standing at 7.1 billion. World gross domestic product during this 300-year period has risen from $370 billion to over $55 trillion today. That is a compound annual growth rate of 1.6%. So everyone's saying, is this growth, improving growth, and unqualified positive development? And can, of course, this finite Earth support this? Because the universe can expand, but planet Earth cannot. So to address the issue of like growth within within limits and realities of limits, you had a study in 1972 called The Limits to Growth. And the authors of this study looked at the Earth under 12 scenarios. Under several of these scenarios within this, they found that the rapidly growing world would impact non-renewable resource constraints and increased pollution could lead to the collapse in the world as we know today in output, and could lead to the collapse in human welfare in the 21st century. So basically, let's take you to the graphs that they've got over here. You've got a scenario where you've got the population on a standard run, and that of course would be business as usual, where you see up to a certain point in the 21st century, you see a massive tipping point being reached, and of course that population starting to fall off quite drastically. That of course, as I say, under the business as usual scenario, you see industrial output up to a certain point, looking at what they forecast in the 1970s as how we're growing and how we were predicted to grow. You see that also industrial output basically falling off quite significantly, and that of course indicates that we are supposedly on a path to destruction. But they say basically if you come in here and you limit growth through population growth, you limit industrial output, and you also implement expensive technologies, you look at ways to change a behavior policy, you can move to a more stabilized world. And that is the green line of these two graphs here. So as you can see, you have population increasing up to a certain point and then stabilizing, and you've also got industrial output increasing up to a certain point and stabilizing. So basically, Lindsay, what is really interesting about what these graphs show us is that now that we've got 40 years of data to take a look at the observed data over the past 30 years, you can see that up to a certain point, the world as we know it has been growing along the standard run business as usual scenario. And certainly when you look at industrial output, we're pretty much on the standard run business as usual scenario. So basically what this is telling us is that at this point in time, we're leading to a path of ecological overshoot, as some call it in the scientific world. I just want to show you two other graphs here quickly. You've got the pollution graph where you've got the standard run scenario where, as I say, once again, you've got a tipping point, and then of course you see that massive fall over there. You see under a stabilized world, you see that massively stabilizing pollution and greenhouse gas emissions. You can see observed data certainly pointing to the worst or bad case scenario, as scientists call it. And then you look at the non-renewable resources scenario, you look at a much more stabilized world if you look to, of course, implement new technologies, you look to change behavior, and you look to have a change in policy. So that, of course, is what we're looking at today. As you said, we're looking at how can we incentivize sustainable development. One of the stats that I found, Lindsay, just to leave you with, is the global ecological footprint is currently 1.5 times Earth's capacity. So basically, we need another half an Earth to support growth as we know today, to absorb all of the waste that we have of the 7 billion people on this planet. So there we go. So I don't know, leave it to the experts to unpack this for you, but so far it's not looking good where we are right now.
No, it's not, Sam, and it's slightly unkind of you to say, or rather the producers to say that I'm not green aware, because if you just look at this now on screen, I'm covering up the label, so there's no free advertising. The reason I bought this at slightly greater expense than the plastic bottle that I could have bought, a local South African brand, this is mineral water by the way, is because it's a glass bottle, and I know for a fact that it costs less, or rather reduces the burden on the world to have a glass bottle than a plastic bottle. So let's get now into it with Thank you very much, Samantha Loring. That was Samantha Loring, my colleague in Johannesburg. Let's now get to the experts, the real experts, notably Marco Lotz, the Group Sustainability Carbon Specialist at Nedbank. Marco, thanks very much for joining us on Power Lunch today. What is the background? Why did you feel it was so necessary for Nedbank to produce this excellent Sustainability Outlook report?
Afternoon. I think it's very important to note that this outlook is produced by a variety of very, very bright people, and I would like to acknowledge the Cambridge University for compiling it. It's the Cape Town contingency. It's very important to get the message out there that even though it's massively complex problems, and yes, we can have a glass bottle versus plastic bottle debate, but just the complexity in the background is intriguing, and also seeing that 15 years back we didn't have the industry, as was noted just now. It's also ever evolving. So it's important to get the right message out there to the client base and hopefully potential clients, so that Nedbank can also show that we are thinking about these issues, although as sitting here we might not have exactly all the answers going forward.
I like the introduction, as I've said to Samantha earlier on. I like the fact that you say sustainability rests on a simple premise, and that is the interconnectedness of all things. And although my tiny little example of the glass bottle versus the plastic bottle, you can argue for days on end, the fact is that that tiny little effort that I've made is interconnected to so many other things.
That's definitely the case. And I think what's also very important is to understand the difference between weak sustainability and strong sustainability. So let's jump into that for a second. Weak sustainability will be, let's say I produce cans of tuna, that I say I halve my pollution, but I double my production rate. So the net effect is we're still using 1.5 planets worth of capacity. On the other hand, strong sustainability will be where you actually reduce your pollution, your impact to the environment, and you are net still better off, even though you double your production. And please keep in mind, we're not against growth. We're not against any prosperity in a country, whether it's local or international. But we need to do it in such a basis that we can, yes, be profitable, but still be sustainable.
Yeah, indeed. In fact, there's a very good case to say that weak sustainability is better than no sustainability, but also strong sustainability is what we should be aiming at. I think what we should do now, because this is such a comprehensive report, is have a look at one of the sections, and that's the unlimited corporations section, because there's some really interesting case studies here, and that sort of highlights the weak versus strong sustainability. Unilever is one, and I'll go on to read what you say in your report. It says it captured media attention in November of 2010. This giant company which makes soap suds, as far as I can understand, when it announced its intention to decouple growth from environmental impacts while improving human health and well-being. It says here, I mean, is this the sort of example that is an example of weak or strong?
Well, within the broader sustainability context, what Unilever said is they will halve pollution, but they will double output. So the net result is that Unilever will produce as much as a specific time in history. So the real question is, at that point in history, is it considered to be strong or weak? And as the Cambridge people put it so eloquently, if all of us had to follow the Unilever approach or any other company, will that then be sustainable or not? So there's a bigger debate in the background than to take a look at an individual company. And the easiest thought experiment is, if everybody does what Nedbank does, or everybody does what Unilever does, will we have a sustainable planet?
What does Nedbank do?
Well, thanks for the opportunity then. There's a whole variety of banking products within the green space, and that can be a green electronic tradable fund. It can be the fact that one can invest in renewable energies through Nedbank. As most of your viewers will probably know, that Nedbank is carbon neutral, so we took our impact to the environment down to zero. So we reduce as much as we can, electricity, paper consumption and the like, and then we actually go and buy carbon credits, a completely different discussion and quite a complicated world, and then we get to carbon neutral status. But a large part of what we can also do is put out the sustainability outlook from the Cambridge University team and just get a message out there that there's a whole spectrum of ways to do about it, or to think about it and to act.
Okay, you said earlier on you're not against growth, which is fantastic because you work for an organisation that is based on growth and profits and capitalism in general. And we've got to look at it from a CNBC Africa perspective, as because one of the things that we want to do on this programme is not just to talk about sustainability, but also help people make money, or rather not lose money. That's the important thing. A significant challenge for investors, you say, and asset managers is to gauge the preparedness of businesses to thrive in the emerging reality of constraints. How much is the investment community going to look at this report and say, I would rather invest in Unilever than I would in some oil company in the emerging market world because of their sustainability prowess?
So first of all, it's important to get the message out there that sustainability is not the lack of profit. Sustainability will be environmental endeavors, it will be social change, it can be cultural advantages, but also it needs to make money. If a business isn't financially sustainable, then it will probably have to close its doors. Now, with that in mind, with legislation coming through like CRISA and a whole variety of environmental disclosures, even pension funds are getting to the point that before they invest, they need to see what is the sustainability or the rating of sustainability, the whole package of sustainability for different companies. So it is being taken into account, and there's an enormous pressure out there to actually increase that.
Marco, just very quickly, last 15 seconds. Please tell me this is not just a flash in the pan. Please tell me this is not just something that looks good on companies' annual reports. This is something that is gaining momentum and will increase in importance over the years.
It has to. It follows King 3 principles. It has to be embedded in every and each company, because sustainability is also financial sustainability. And yes, it's got environmental, all those aspects, but profit is not to be underestimated. It will be embedded.